What's good, everybody? Mo Kama Sunday service. Today we are going to be talking about how to control $11,000 in stock for $3,000. Specifically, we're going to be talking about my AMD leaps, and I'm going to be explaining what leaps are today. And what I'm going to be going over, just some basic knowledge. What are options? What are leaps? And then how to buy leaps. Just specifically walking you through my AMD trade right now, which is going really well. I'm up about 70 to 80%, almost up $10,000 on it. So number one, what is an option for the folks on YouTube that do not know? You're just learning. An option is a contract or the right to buy specific stock at a specific price on a specific date. And so your question is like, why would I want to do that? Why wouldn't I want to buy stock now? Well, it's a derivative product, right? Where you might be able to spend less money to control a certain amount of shares rather than paying more to buy the shares outright. And just to give you an example of like what is an option, just the very basics, like here we're looking at AMD options that expire on July 18th, 2025, which is within what, 2 to 3 weeks. And so if I bought the 143 strike and bought a call, right, that would cost approximately $610 per contract. One contract controls 100 shares, which is why this is not $6.10. But if I'm actually going to be purchasing this option by clicking this column in this area, it would cost me $610 to control 100 shares of AMD, which expire on July 18th, 2025. And so what do you mean? What does that mean? That means that if on July 18th, 2025, when the market closes, if AMD is above $143, right now is $143.81. Let's say it's at 150 on July 18th, 2025. That means that me buying this particular contract would entitle me to buy 100 shares of AMD at $143, even though the price is $150 in my hypothetical, right? And so the cost of that contract is $610, right? So that's what we mean by options. And yes, that's the simplest form. It's essentially a contract to control stock. And as you see, if I wanted to buy 100 shares of AMD, that would cost me approximately $14,000. And so let's say my account isn't that big and I don't have that much money. It might be more in my budget to spend $600 to control 100 shares and trade AMD if I'm swing trading or day trading, rather than spending $14,000 trying to control 100 shares, right? So here, if you have a smaller account and you trade options, you can control a lot more shares and leverage your money. You can also lose money too, but you can leverage your money more with options. Just to give you an example, right? So that's why people trade options. And then you don't have to hold these through expiration, right? If AMD's price goes up, these options will also go up in price, which means that you could sell them for a profit before the expiration date on July 18th, 2025. So a lot of people with smaller accounts or that are trying to leverage their accounts will use options because you could trade with less money and get more leverage, right? So, number two, what are leaps? Leaps are just options that expire further out. And for me, I don't trade leaps, or I don't consider something a leap unless it's at least a year out. Some people say 6 months, 9 months, that sort of thing. But typically, I'm trading at least a year out. Sometimes I'll like to go find something a year and a half and 2 years out, right? And the reason why, for me, I think leaps are so advantageous, especially on the buying side, is because of something called time decay. Time decay will eat at your option price if you are within a month or a couple of months into the expiration. That's when time decay eats at your option price. So if you are buying calls or buying puts, that time decay, when you have a close expiration date, is going to eat at the value of the option. And so the move in the stock doesn't need to just happen, it needs to happen fast, right? And so when you buy leaps, you can kind of sit back a little bit because time decay is not likely going to affect the option that much until you get closer to the expiration date. And so here, just to give you an example, this is a snapshot from my actual account. I bought some leaps on AMD in two separate accounts, right? Two contracts which controls essentially 200 shares. And I bought those for $3,000 a piece. So each contract cost me 3 grand. So I put up about 6 grand on that trade and another 6 grand in another account, right? And so just looking at the option price here, what this means is the option expires on June 18th, 2026, which is a year from now, right? And I bought these, I think, a few months ago, a couple of months ago or so. And my strike price is $100, which means if on June 18th, 2026, AMD is higher than $100, let's say it's $200, I will still have the right to buy those shares at $100. And you're like, wow, I would like to do that. Yes, you would love to buy shares for a lower price than what they currently are. However, the price that you pay, like the trade price, is the price that you are paying for that right, right? So options do have value. And I've talked about this on previous episodes. I like to trade options more so in the money because there's more intrinsic value, which is something else I've discussed on prior episodes as well, right? And time decay affects you less the higher you are in the money, even if you have a leap that's a year or so out, right? So, and as you can see, these have been pretty successful. I'm up $4,800 in two separate accounts for these particular leaps, up about 70 to 80% on this trade. So I'm really happy. In fact, I've already put in a stop loss at 25%. So this trade is officially a win for me. I'm not letting it go back down further than 25% if it wiggles back down. So this is already in the winner camp. There's no way I'm going to take a loss unless we have some sort of huge, huge, huge gap down on AMD. This is officially a winning trade for me. I'm going to at least be up 25% and hold it. Hopefully I hit my target, which is at approximately 150, where I'm probably going to scale out, sell half of my position. And then this might be the stock that I let turn into shares in 2026, sometime in June, if AMD decides to skyrocket. And I'm going to leave a couple of runners out there, right? So how do I buy leaps? Number one, I always look at the fundamentals. If I'm going to be holding anything through earnings periods, it needs to be a good stock. It can't just be like, hey, I'm trading this for 30 days, 20 days, that sort of thing. I want it to be something ideally I could hold in my account for over a year. So it does need to show increasing revenue, revenue growth, margin growth. What's the cash flow look like? Is the CEO a good CEO? Are they having any internal, external issues? That sort of thing. Well, what's the asset to debt ratio? Those are the things that I'm looking at before I get into a leap to determine the fundamentals, which I had done on AMD before I hopped into these leaps. My new rule now for anything is that I want at least a 40% discount off the all-time high, at least, right? And then number three, are the options liquid? And I'll show you what I mean by that later. So I talked about the fundamentals. In terms of was AMD at a 40% discount, how do I determine that? I draw Fibonacci retracements on a 5-year week or 5-year month chart, right? As you see here, this is a zoomed in view. When I purchased it at approximately 110, which is when I got into AMD, it was over 60% off the all-time high, closer to what, 70%. So for me, it hit my 40% discount rule. I am not buying something here at $227, uh, and that person who bought there is never trading stocks ever again or options or whatever, right? Right. They probably lost terribly if you tried to buy AMD at 227 bucks, which is why I will never buy anything at an all-time high. And I want something at least around this level at 160 bucks, but I saw AMD was just so far down at 110. Yes, it came down to 80, 90 bucks, which would have been a better entry price, but I felt comfortable holding because it was already so discounted. Even at this point, which is I think I got in around this candle here on a weekly chart. It wiggled down, I held it, and it's come all the way up, and it's officially a winner right now, right? And it's been one of the hottest stocks over the last couple of weeks, and one of the hottest sectors because semis are back right now. Nvidia's been doing really well too. In fact, just most SMH has been doing really well, right? All right. And then are the options liquid? So this little green flag on Thinkorswim will show you specifically the options that I am trading right now. This is the strike price that I showed you earlier, the June 18, 2026 at 100. Why did I specifically grab this strike? Well, because it had the most open interest and it had a delta over 75, right? And now because it's come up, the delta is 86 cents. And if we're talking about delta, what does that mean? That means that this option is going to go up currently where it's at 86 cents for every dollar in movement in AMD. So if AMD goes up to 144.81, you should see an 86-cent increase in this particular option price over here if you look at the ask, right? So I was just looking at this and deeper in the money, or not extremely deep in the money, but in the money, further in the money, I saw that there was 6,598 open interest. I don't know if it was that level at that time, but it was definitely a high open interest amount. I consider anything over 1,000 to be a liquid option. And for me, I would just want there to be enough people buying and selling this thing so that if I do decide to exit or I need to exit, there are enough people interested in buying this for me or buying this from me, which is why I'm extremely interested in the liquidity. And if I don't see liquidity in leaps, that could be a thing that stops me from trading a particular name, right? And so just looking at the definition of open interest, it represents the total number of outstanding option contracts that have not yet been settled, exercised, or closed through an offsetting trade. It's a measure of market activity and liquidity for a specific option, and that is why I use it. Please go check out one of my old videos on setting up your Thinkorswim, if you use Thinkorswim, to make sure you have all of these important tools and metrics for options. The ask and the bid are always there, but I always like to see Vega, that theta, delta, the open interest, the last price that it was traded for, and the volume, right? And not that I'm looking at all of these consistently, but yes, I'm always looking at the bid and ask to figure out what the spread is between, to see like how volatile this trade might be. I'm always looking at the theta to see what time decay looks like. And as you'll see, time decay is relatively low, especially as you get higher in the money. And it's relatively low if you're this far out, a year out from expiration, versus if you go check something a week or two from now, theta can be extremely high, right? And the delta, we explained that earlier, right? But make sure you have all of these things on your chart. And I always like to see at least 40 strikes, if not all of them, just so that you know that you're getting all of the information in this option chain, right? All right, that's it for the major lesson today in terms of my weekly stock picks. My disclaimer, which is in the YouTube description, this is for informational purposes only. Stock trading, investing is risky, so do so at your own risk. and in conjunction with any financial advisors and professionals that you may have. And do your own research. Ideally, you do enough research to where you don't need my research, or I'm just someone you like listening to, right? From a volatility standpoint, what I'm going to be looking out for in terms of entering a trade or exiting a trade is we got Fed Chair Powell speaking again on Tuesday. Man, these Fed Chair people have been out the last few weeks. But it hasn't really caused that much volatility, at least not to the downside, for what I've been seeing, right? And then if you've been paying attention, President Trump has been contemplating whether or not he is going to appoint a new Fed chair earlier because he doesn't like the fact that the Fed isn't reducing interest rates fast enough. And we know if interest rates get reduced, that's going to juice the economy a little bit, right? So building my watch list for next week. Let's see, what do I usually? I usually go to koyfin.com, KOYFIN, right, to build my watch list. And I'll come over here to the market dashboards, go to the U.S. sectors. And I already knew what's hot because my account is filled with semiconductors. And so semi's been killing. If you would have watched the show last week, I told you that was the highest on my list. However, we didn't get that much of a dip, so I couldn't swing trade it. We just got this little dip. We got a little mini dip, but nothing that would have caused me to swing this. But SMH is top of the list if we get a pullback, which I assume we are, just because it's been so hot. Like I assume we're gonna get a pullback sometime next week on SMH. So anything inside of SMH, I'm gonna be ready for. SMH itself, I might trade because it's usually pretty liquid. From a swing standpoint, when I say swing trading, typically for me is anything from a 1 day to an overnight hold. Anything from an overnight hold to 2, 3, 4 weeks, right? It's typically when I'm swing trading. That's my typical swing trading window, which is why I will usually go look at the last month of performance in KoiFin because that's my swing trading window. And so yeah, I'm looking for a pullback in SMH. Metals and mining, I'll probably look in that sector. Let's go back to SMH. So we're talking about AMD is looking really good in SMH, Nvidia is looking good in SMH, AVGO, TSM. I have to look at TSM, but I know AVGO is doing really well. Pretty much the whole sector has been doing really well. So I will be looking for pullbacks next week. XME, metals and mining, XLK. I know Isaac wanted to talk about the Qs. I saw some of the indexes hit all-time highs. I think the S&P and NASDAQ hit all-time highs last week. So those would be my three sectors. And actually even XLC looks really good. I don't think Google and Meta are the biggest components of XLC. Meta's doing way better than Google. Google is trying to get up there, but I think Disney was doing really well too. So I think Disney and Meta would probably be on my list next week. Meta's really expensive. I can only trade it if it has if it has some liquidity on the put side, because I'll trade it with spreads because it's so expensive. And then Disney would probably be on my list on the XLC side. Those are the things that I'm trading. So like communications, tech, maybe some metals and mining. I'll be looking at like Freeport McMoran, FCX, NEM. I don't think NEM was doing that well last week. And then, of course, semiconductors. Just because I know Isaac wanted to look at the Qs. Let's go. So before I look at the Qs, I'll probably look at NQ, which is the futures, the NASDAQ futures. Qs are just an ETF derivative of the futures anyway. And so let's zoom out. I know, what was this? Maybe a couple of months ago, I was teetering on whether or not we were in a bull market, a bear market, or a flat market. And that was, I think, around right here, right? And this is a 5-year week chart. It appears that we are back in a bull market, folks. That's how I would categorize it. We are well above the 200 week. Well, no, let me go to a daily chart. We are now well above the 200-day moving average, right? This is exponential. I use EMAs instead of simple moving averages. Well above the 200. The 50's on top of the 200, 34 is on top of the 50, and the 21's on top of the 34, right? So all of these moving averages, the shorter periods, are on top of the longer periods, which means bullish activity, right? So NQ, the Qs look bullish, all-time high. I think this was the previous all-time high here, which is around 22,570. And now we at 22825 on NASDAQ futures. So the Qs are hitting all-time highs. So yes, I would swing this next week if we get a significant pullback. Uh, Let me go. Well, before we do that, let's look at the ES too. The S&P 500 looks like it's hitting an all-time high as well. And let me just double check. Go back 10 years just to make sure. Yeah, we hit an all-time high. So markets look really good. The Russell has been the laggard. Russell is finally getting over the 200, but that is probably the laggard. It's the small caps, and then let's look at the Dow. Dow is not quite at an all-time high, but it looks like it's trying to get there. So tech has been really strong. S&P 500 has been really strong, mostly due to tech, but the Dow has been pretty consistent too. You see, all the shorter period moving averages are on top of the longer period moving averages, which means bullish activity. I do not think we are in a bear market anymore. All right, let's look at the NQ. And so, like, the Qs are a little difficult for me to trade because I wouldn't trade them I would trade the Qs based upon NQ, right? So, and some of these, I don't know how to explain that. It's a class that I've been taking the last couple of years. Like, just understanding the proxies between the futures and how the futures kind of drive everything. So, I would trade maybe the Qs on Monday. Looking at what would be my price, probably like really like 2200. Just nice round number. A bunch of zeros. I really like the 2200 level. It's a lot of volume below it though. It's one thing I don't like. But I think it'll be pretty exhausted if it gets there on Monday. And my levels change. There's a caveat. My levels change every single day because I'm measuring daily volatility in the way that I trade. So like if this doesn't hit 22,000 on Monday, on Tuesday that level might be a little lower. It might be 21,800 because I trade exhaustion. I want something to be exhausted for that particular day, extremely exhausted before I trade it, you know. That's just how I trade personally. And so so if this hits 22,000 on Thursday, I might not necessarily have that as my level on Thursday. I will recalibrate every single day in the morning and figure out what I think would be exhaustion for that particular day. And then I'll usually go look at like a particular candle like this one, a really big candle, and the 2200 is or 22,000 is right underneath that. So like 22,000, maybe 2280 would be like my range where I think this would bounce up. And it's a positive bullish trend. So a pullback to continue the trend is typically like how I'm trying to trade this. So if you look at the QQQ, it will look similar, but I will pay less attention to the price action here because you see this candle here looks way smaller. And the only reason it's way smaller because of this gap up in the middle of the night is because the Qs cannot be traded as often as the NQ, which is open like 23 hours of the day. So you don't see a big gap up on the NQ. That's because the NQ futures, the Nasdaq futures were open during that time. So you saw that big gain when here it looks like a gap up because QQQ can only be traded during normal trading hours, right? So that's why I like to use the futures as a proxy versus QQQ. So if I am going to enter QQQ for a trade next week, I am going to do it based upon what the futures price is doing because this is more of a leading indicator of the Nasdaq than the ETF version. All right, that's it. That's all I got for y'all. Unless y'all want to look at something specific. Isaac brought up the Qs, that's why I brought those up. But yeah, that would be on my list to swing next week. And if we just look at Disney, that's why I was telling about Disney. I was looking at this last week. In fact, it looks like I had set it up on Friday, but it didn't hit my level on Friday. All right, if I don't hear anything, that's it. Mokama Sunday service, making it rain without the umbrellas. I'll see y'all 8 a.m. next Sunday.
Hey, how's Brookshire doing?
What's up?
How's Brookshire doing?
Hathaway?
Yeah.
What is it? BRK. I always forget their ticker. And then the big one. Is it this one? No, where's the big one? Hold on, let me go pull up, or if I just type it in. It's because the shares are so damn expensive on these damn things. Let's look at the B shares. Because I know the other ones are like, oh no, this one is what? It's $730,000 a share. So here's the A shares. So the only way the average person can get in these is by buying the B shares. Hold on, Burke. Since it looks like since Warren announced his he was leaving, it doesn't look that great. It's still holding though in terms of that 200, but when I see the market hitting all-time highs, what I don't want is to see something going the opposite direction. Especially it's more of a financial stock too, in the financial sector. I assume that this dip was due to Warren announcing, Mr. Buffett himself, that he's retiring. I assume, but I don't know. But it looks, if you're talking healthy over the last 5 years, like can't get any healthier than that. The issue is there's going to be a major leadership change, and do you trust Warren Buffett's successor to get the same sort of results that the best investor of all time has been getting? That is the question.
Appreciate you, man.
Yep.
Good night.
All right, folks. That's it. Till next week. I'll talk to y'all later.
All right, man. Appreciate you.
Yes, sir. Peace.